Stocks suffered their worst day of the year today over concerns about inflation and the economy. Some are questioning whether the Fed is doing enough or if we're headed for a recession. Sarah Schuckman explains yesterday's interest rate hike and its potential impact.
For a house, a car, or simply your credit card, borrowing is about to get more expensive.
Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down.
The Federal Reserve is bumping the federal fund rate by 0.5%, the most in 22 years, in response to inflation, now up 8.5%.
So things are getting much more expensive, much faster, as most people have noticed when you go to buy groceries or get gas, things like that.
Inflation is influenced both by limited supply, think supply chain shortages, and increased demand. The Fed is trying to control demand, making it less desirable to finance. For example, a $5,000 loan will now cost an additional $193 in total interest. As fewer people find that a good deal, demand drops.
And that keeps prices down, but it also slows down the economy because we're not producing and buying as many things as we were.
And that can lead to recession, though Fed Chair Jerome Powell says there's nothing to suggest one is close. What you'll notice is the cost of new mortgages jump and any variable rate debt, home equity loans, private student loans, and likely your credit card APR increase within a few billing cycles.
If you have any credit card debt, which on average people have a fair amount of, now might be a really good time to try to pay down some of that debt.
One positive, eventually your savings account might earn more interest.
But in general, it looks like they're going to continue to slowly ratchet these rates up.
The hope is doing this gradually keeps the economy humming, but Case Weatherhead economics professor Jonathan Ernest says the reality is
higher interest rates doesn't suddenly fix supply chains or increase the amount of oil or natural gas flowing into a country or something like that.
While it may help, the real impact on inflation could be wait and see. Sarah Schuckman, 3 News.